Okay, let's dive into this. We're unpacking a massive Wall Street mystery today in this explainer. Back at the end of July 2026, Reddit dropped its Q2 earnings report. And man, the market's reaction, it absolutely sent shockwaves through both the tech and finance worlds. Because what happened right there on the surface completely contradicted what was actually going on behind the scenes. 28%. Just think about that number for a second. That is exactly how much Reddit stock plunged virtually overnight, right after they put out that Q2 release. We're talking billions of dollars in market value, just wiped out in a matter of hours. Now, usually for a high-growth tech stock, a sudden drop like that, it's a huge red flag. It signals a catastrophic failure in the business model or, a massive miss on revenue. But as we're going to see, that was not the case here at all. No way. And that brings us to the real central question of this whole explainer, what we're calling the earnings paradox. Like, how does a stock crash after absolutely crushing its earnings? It's crazy, right? How does a company completely beat Wall Street's expectations across the board, only to turn around and watch investors just slam the panic button and sell off over a quarter of the company's value? To figure that out, we've got to look directly at those Q2 numbers. Now, what's really interesting about this slide is the sheer scale of the financial triumph we're looking at here. I mean, revenue came in at a staggering $805 million. That is up 61% year over year. Earnings per share, $1.25, which easily beat the 95-cent expectation. And to top it all off, they actually raised their Q3 guidance to between 860 and 870 million. By literally every traditional metric, this was an absolute home run. Yet, the market just completely rejected it. So why? Section 1, Unpacking Reddit's business model. Let's shift into investigation mode and look under the hood to see how they actually make their money. So Reddit's revenue is basically a tale of two very different businesses. That massive 95% slice, that's digital advertising, bringing in $762 million. That is the core engine for sure. But it's that tiny little 5% slice, data licensing and other revenue, sitting at $43 million, that Wall Street has become just absolutely obsessed with. That tiny sliver is all about Reddit's agreements to let AI labs, like Google and OpenAI, train their large language models on real human Reddit discussions. And that tiny slice of AI licensing, that is exactly what drives this spectacular number, 91.3%. This is Reddit's best-in-class gross margin. Because they're taking existing user-generated text and monetizing it for AI training, their margin profile looks exactly like an elite software company practically printing pure profit. It doesn't look like a standard social media site at all. This 91.3% is the whole reason Reddit had this massive valuation premium over peers like Snap or Pinterest. Investors weren't pricing Reddit as an ad platform, right? They were pricing it as a pure-play AI data monopoly. Section 2, Below the Iceberg, the Crash. Culprits. Okay, a premium valuation requires absolute perfection. So let's dip below that surface-level earnings beat to see what actually spooked the market. All right, here are the three main culprits that triggered that crazy 28% sell-off. First off, U.S. daily active user growth stalled out at just 6% year over year, which was completely flat sequentially. Second, there was a really glaring absence of any new AI data licensing partners announced on the call. Crickets. And third, the broader ad sector was already super jittery following Meta's earlier comments about heavy AI capital expenditures. Basically, the market was already looking for reasons to be nervous, and Reddit just handed them three big ones on a silver platter. Let's dig a little deeper into that stalled user growth, because this quote from CEO Steve Huffman is absolutely critical. He noted that search engine AI overviews are currently sending traffic back to Reddit at a lower rate than traditional search results. This is huge. It introduces a massive threat, Google SEO dependency. If Google's new AI overviews just answer a user's question right there at the top of the search page, well, the user never actually clicks the link to visit Reddit, and that directly hurts Reddit's logged-out, top-of-funnel referral traffic. And this brilliantly illustrates why that squeeze in the US is so incredibly damaging. It all comes down to a massive ARPU, or average revenue per user, disparity. Look at this. A US user generates $11.85 for Reddit, while an international user only generates $2.26. That is a huge gap. So even though Reddit's international daily active users actually surged by a fantastic 28%, the flatlining of that highly lucrative US growth just completely terrified investors. Then, we had the second trigger, the AI licensing disappointment. So other revenue grew 24% year over year to $43 million. I mean, sure, that sounds okay, but remember that premium valuation we talked about? Wall Street was actively pricing in the announcement of a brand new AI data licensing partner on this specific earnings call. So when the call wrapped up with absolutely no new enterprise deals beyond the existing Google and OpenAI partnerships, the short-term momentum traders just bailed and the stock collapsed. Section 3, the valuation reset. So how did this massive 28% sell-off fundamentally alter Reddit's valuation multiples and its overall risk-reward profile? Let's take a look. Let's move to and see how this builds a completely new picture for investors. The enterprise value to forward sales multiple dropped from a lofty 11.5 down to about 8.5, and the forward price to earnings ratio plummeted from between 45 and 50 all the way down to 31. So what does that mean in plain English? Basically, the stock went from being priced for absolute perfection to being priced like just a regular business. That hyper-extended pure-play AI monopoly premium just completely evaporated into thin air. The drop actually pushed the stock right back down near its fundamental base case floor of roughly $130 to $140 a share. Section 4, the Reddit investment thesis. All right, let's zoom out a bit here to separate the short-term noise from the long-term structural realities of the business. So the crucial point is that Reddit's fundamental base is actually incredibly strong. The underlying financial engine here is totally self-funding and highly profitable. I mean, Reddit is sitting on $2.8 billion in cash right now, with absolutely zero long-term debt. That's huge. They boast a 35% free cash flow margin. Oh, and management just authorized a $1 billion share buyback program. They're effectively using this market pullback to retire shares and provide an active, solid floor for the stock. So structurally, the business is fundamentally intact. But to justify that long-term growth, Reddit really has to answer a few existential questions, starting with this one. Can Reddit transition from borrowed Google search traffic to actually owning native logged-in app users? Think about it. If users start going directly to the Reddit app as their main search destination, searching directly within communities like r/AskReddit, then Google's AI algorithm changes suddenly don't hurt them nearly as much. Plus, Reddit is actively using machine learning auto-translation right now to expand its international reach natively. Now, the second core thesis test is all about their AI mode. Is Reddit's proprietary data truly an irreplaceable resource that AI labs must continuously pay to license? Reddit definitely claims they hold the premier repository of authentic human consensus on the internet. And hey, if that's true, those frontier AI labs will absolutely have to come back to the negotiating table. As observers, we have to remember that enterprise data licensing cycles are really lumpy. They take a lot of time to negotiate, and they definitely don't always conveniently align with a 90-day quarterly earnings call. Which leaves us with this final, really profound question to think about. Will Reddit become the independent human review layer of the entire internet? Or are they destined to just be a site discovered via Google? Look, that 28% crash definitely wiped out the short-term momentum, hype, but the underlying cash flow and that high-margin business, they remain stronger than ever. The true test going forward is whether Reddit can leverage its massive, authentic communities to build an independent ecosystem that doesn't just rely on standard search engines. Weigh that immense long-term potential against this recent market panic, and I think you start to see the full picture of the Reddit earnings paradox. Thanks so much for joining me on this explainer. Keep learning, and we'll see you on the next one.